Hey guys, I know it doesn't look like it, but I'm at the beach for a few days with family down here in Gulf Shores. Just out running errands this morning as I provide an update to the markets this past week, which we saw some volatility enter back into the equation. We don't always like that because of the up and down swings that we see from day to day. A lot of things that have happened, though, I think from last Friday to this Friday that are significant. Obviously, the conflict in the Middle East, our hearts and prayers go out to those families and all those that are affected in this terrible atrocities and things that have occurred. Our prayers are those with those in Israel and honestly both sides of the conflict. We just hope that peace is resolved and we can move on without just the terrible things that are happening over there. So definitely don't want to ignore that. But I also believe that also can impact our rates in some indirect fashion, because oftentimes traders, when there's instability in the geopolitical sense or instability in what we feel like is going to happen in the next few months, oftentimes there's a flight to safety, which means investors often put their money in bonds as opposed to equity. Now it's just a theory that I have, that this past week I believe that earlier in the week, Monday and Tuesday, we saw bonds actually Tuesday rather, the market was closed Monday, but Tuesday and Wednesday we saw bonds go up significantly, and I think that may possibly have something to do with it. And then Thursday we saw a reversal of that, and rates went back up a little bit. And then today, we're seeing numbers a little bit more in our favor. Now I do believe there are technical signs in the charts that are things that we should possibly cautiously be optimistic about. We're beginning to see some resistance levels not be breached, so to speak. And I think we're seeing that earlier in the year, but it's just as much as we thought when rates couldn't go higher. We thought the tops were behind us. We would test those levels, and then we would inch up a little bit more and more and more as you started seeing rates get in closer to 8%, and in some cases even higher than that. We're beginning to see some of that now. We're hopeful that that's behind us. There's no guarantee, of course. You just don't know what's going to happen from day to day. So again, for the third week in a row, I would continue to stress temporary rate buy downs. We know long term, all the signals are there, as we've talked about, that rates will subside to some degree. Even the Feds among themselves, there's dissension among the Fed members. Some believe that maybe they should raise rates just a little bit more, one more time this next month. A lot of them, however, are signaling that they feel like it's over, that they've done what they needed to do, and there's not a need to do that anymore. So we'll see what happens. This next month's going to be critical, obviously, in the markets and what they decide to do. I think if they decide to pause, I think that's going to be a very positive signal going into the holiday season, going into the winter months, and hopefully positioning us for 2024 on much better footing regarding interest rates. And I think rates will then start seeing 6 again, maybe 5. Who knows what'll all happen? If it'll all happen in 2024, it may take a year or two to get to where we really want to get to, but I really feel like 5% is in the radar eventually. Now, having said that, temporary rate buy down will help us overcome that. So we've talked about that before. Let's talk about how to calculate that. It's a very simple calculation, but the complexity is do you want to do it for 1 year? Do you want to do it for 2 years? Do you want to do a 2-for-1 or a 1-for-1 or a 1-0? What's the difference between all that? Give me a call. Let's talk about the differences. I can tell you how to calculate that. You may already know how to do it, but let's structure it in the listings. We're beginning to see some real estate partners that are making it part of their listing, talking to their sellers. Hey, listen, you can get a higher price if you'll consider temporary rate buy downs. Also, I want to talk to you about a little bit more short to mid to long-term planning and how we can put you in a position to get more commissions, get more listings, and get a little bit more success, more volume in 2024. Let's get together, grab lunch, grab coffee. If you're getting this video, let's hook up, shoot me a text, let's get on the calendar, and let's make it happen. You guys have a great weekend, and we'll see you soon.